All right, company outlook. I think I started on some of that before within the report. But yes, we are. The next thing for us on the short term agenda is to build out our FESCO Oval service station. That would be the third service station that we operate as a business. Um, we are optimistic about that station. Again, it will feature. So FESCO likes to come to our community. We want to improve spaces in Jamaica. We've coined that term a destination station. So we always want to create destinations that we can feel proud of. Jamaica is FESCO is a proudly Jamaican company. Our I wouldn't call him resident architect, but one of the visionaries of our companies regarding it's the architecture. Michael Giles came up with this spectacular design for FESCO Oval, very futuristic. It will offer QSR, a drive-through QSR. It will also have a convenience store, ATM. We're going to have, as I said, a six-a-side. We're going to have a six-a-side turf football field there, so the community can use. And we're a sports loving company, so we also want to use the facilities. But we'll have that facility there, which would also include a homework center for the residents of the community to use, and to be able to have free Wi-Fi, from us. In addition to that, we'll have a small LPG depot, so we're able to supply LPG to the neighboring environs. And in addition to that, as I said, we'll have a QSR restaurant. We'll offer all grades of fuel at this location, and I do believe that it will improve the aesthetics, the convenience, and the whole environment. And it's something that FESCO strongly believes in. That wherever we go, we should positively impact that community, and always try our best to create a destination that people feel proud to go, patronize, and support. In addition to that, as I said, going forward, we'll also be expanding our investment into LPG space. Again, we have really, really done what we hope to have done and achieved a little bit more faster than we thought would achieve certain levels of market share. So we'll continue investing in that space. We'll continue to seek opportunities in expanding the gasoline side of the business, which is growing also. So what should you expect? You should expect increased and continued profitability from the company. We will not be paying dividends this year, and I don't believe we'll be paying dividends next year. And this is mainly a function of it's cheaper for us, on a company right now, for the company to retain earnings rather than to try to borrow. The cost of borrowing is high. Our last bond was at 11.75%. So what we have taken decision to do to maximize the returns for our shareholders is to hold back on the dividend, save that interest cost, and then when we next pay a dividend, the dividend will be more sizable because we have turned, as you see, a company that used to make $100 million per year when we IPO'd, that is making in excess of $150 million per quarter. So the next time we pay a dividend, the dividend will be much stronger and in a greater nominal size. And we're just taking advantage of a situation in which interest rates are not conducive to for you to borrow. It's just the cost of funds is just too high at this point in time for us to borrow. So and we're growing, and that's the main thing. Sometimes you pay the dividends when you're not growing, but at this point in time we're on a really strong growth path, and our growth path is profitable. So as a board, And as a company, we have taken the decision to continue to grow, forego the dividend in the short run, or for another year, and then pay a bigger dividend when it's time to pay the dividend.
Thank you so much for that overview, Jeremy. I'm sure that the audience appreciates it. I know that the detail about the FESCO oval is very encouraging for many. So we are already seeing questions in the comments, but I'm encouraging those who are watching, if it is that you have questions for Jeremy, please put them in the chat and we will address them now during the Q&A section. So to get started with that, Jeremy, you would have mentioned no dividends, right? And of course, that's a major talking point for many persons, especially in this economic climate. So your explanation was very clear that debt is expensive right now. It is more cost effective for you as a company to utilize the funds that you have. So with the FESCO oval coming up, are you saying that what you have in store, or what you have is adequate to cover the cost of the FESCO oval, or do you expect that you will need to take on additional debt for that?
Excellent question. So there are different cost of funds for various types or secured ventures that you do as a business. So in the past, we have unsecured bonds, we have partially secured bonds, and we also have a mortgage. Now, construction financing and a mortgage is one of the more attractive or least cost interest rates that you can get. So that interest rate is significantly lower than 11.75%. And for a construction project, we do hope and intend to access construction facilities to help build out that real estate development project. On the LPG and equipment side, that side of the business, that is more, unsecured bond, because those assets are, all over the place. So if you ask the direct question, for FESCO oval, do we intend to access the debt market? Yes. If you look at from a cash flow standpoint, from an EBITDA standpoint, do we generate enough to build that project? Yes, we do. However, our CapEx program for the upcoming year is significant because we do have a lot of and significant projects coming, in store. Those will include, again, building out the LPG business. Again, that is very capital intensive. We're gaining significant market share, and we want to continue to expand in that area. In addition to that, we have also other service station plans and CapEx spending that we'll be making. I can't announce those yet until they're further along their development path, and certain approvals have been granted by the relevant authorities. But we do have a strong pipeline of CapEx for the upcoming year and for the upcoming next 2 to 3 years, which would necessitate us going beyond the cash flow that we do generate. And again, as I said, if you look at what we did in the last month, we do generate strong EBITDA, which enables a few things. Enable us to, one, pay down the debt; two, service the debt, because you have to pay the debt and the interest. 3, it enables us to expand in LPG, and it also allows us to expand our gasoline distribution business. So yes, we're generating a lot of cash, but there's a lot of room for us to grow. And at this point in time, rather than distributing that cash, we believe that we should invest because we do have significant ROI projects that we can invest in. So, the goal is to invest now and pay you a bigger and more substantial dividend, in a year or two hence.
All right, fantastic. Thank you for that. So we have a few questions from the audience that we want to get to, and we will start with, The question from Omar Simpson: was the last gas station a dealer-owned, dealer-operated station?
Port Maria is a dealer-owned, dealer-operated service station. As a company, we only operate two service stations, FESCO Beachwood, and we operate Kidston Town.
All right, so we're having a bit of technical difficulty, but no worries. We will get that sorted. As long as you're hearing me, we will continue. Thank you for that question, Omar. Now, Orville says that he wants to know why it is that every time the share price is making headway, there's a sell down. Now, he understands that you do not control the share price. However, he believes that directors are guilty of that sell down. Is there anything that you'd like to say to address that particular point?
Remember, shares are held by individuals. I have, I don't have any control over, anybody's personal financial decisions. But what I can say is that typically people sell shares for personal reasons, whether they want to, whatever that personal reason is. I mean, it could be as simple as paying for your children's education, buying a home, etc. But all of those decisions are personal. I do not believe at this point in time, or any point in time in the past or the near future, that it's a sell down to reduce their interest in FESCO as a going concern. Directors are close to the business, but people make personal decisions, with their own financial planning that are personal. I haven't done so because I just personally haven't had the need to do so. But personal decisions remain personal. But it has nothing to do with just a personal decision.
Thank you for that, Jeremy. We also have a question from Jerome, and he's asking, what is the current level of profitability for FESGAS?
Excellent question. We don't break out into segments. We don't share those numbers, but it's accretive. Put it that way. It is profitable.
Okay, wonderful. Thank you. In a follow-up to that one, there was a question from Sean Brown, and he was asking, does FESCO have intentions to do an acquisition, especially on the side of the LPG market?
Not currently, we don't have anything on the table, but generally speaking, even if we did have something on the table, we wouldn't announce it until it has materialized. But right now, we don't really have anything on the table regarding that. But it's something that we're open to, given the right opportunity. Given the right opportunity.
All right. And one more question about FESGAS was there, and that question is actually coming from the Instagram audience. At what point do you think the LPG business will make a material impact to the existing earnings?
Excellent question. Again, I don't want to break down that segment for competitive reasons, but suffice it to say, if you just look at our numbers in aggregate, though the LPG business has come with increased depreciation, because I believe our depreciation year to date is about 143 million, because again you have to buy all these cylinders and assets. Compared to last year, on an EBIT and EBITDA basis, we are ahead of where we were last year. So it's making an impact. The business has not really run through 12 months of solid operation through our books yet. So in the next year, in the year 2024, 2025, you will see a greater impact on our net income as it relates to, the contribution of FES gas and LPG, but, giving you the definitive breakout between what is FES gas and what is our distribution business. At this point in time, we do not believe that that is in the shareholders' interest in sharing that data, because it compromises our competitiveness, because we don't have that data for our competitors.
Understood. And I think it is clear that it is making some headway. So we look forward to greater growth from all segments of FESCO. The next question is from Jerome. Would FESCO consider acquisitions in synergistic industries that will allow for diversification of revenue?
So, yes. Short answer to that is yes. There are some opportunities that develop from having destination stations. So there are some business that are attached to the business that we're in currently. Obviously, we're in the retail space as a CSR, as a convenience store operator. We might expand further into operations of businesses within our ecosystem of the service station or the destination station. So there is some diversification planned around that area. We'll speak to that greater when we make those announcements. Further than that, we always look at opportunities to diversify. However, we do have some strengths in the area that we participate, and we do have a lot of experience and knowledge in the areas that we're focused in on, and we're focusing on heavily on the gasoline and the cooking gas space. And at this point in time, that space will account for the majority of our energy and time. But yes, we do think about, and we do and will participate in diversifying our revenue sources. And again, it will start with the ecosystem of the service station and the destination station.
Sounds good. So Terence asked a question similar to what you would have mentioned before. And he's asking, when do you believe that the profits from LPG will significantly outweigh its cost or the depreciation?
Significance is a key word there. Again, we're just about a quarter into significant LPG earnings. So I do believe for the upcoming financial year, there'll be growth in that area, because you're going to be analyzing a LPG business rather than it just being available and being deployed for less than a financial year. For the upcoming financial year, it will be deployed for a full financial year. So you will see growth in that area.
So though it is not broken out for competitive reasons, we should be able to identify, identify some changes in the numbers at least.
You should expect a further expansion in gross profits for the entire business. We will not break it out, but you will see a greater expansion in gross profits, because now you'll have 12 years or analyzed gross profits for LPG rather than half year. Yeah.
Understood. So Jerome again is asking, now with a further outlook, a 20-year outlook, what has the most potential in terms of profit generated, gas stations or LPG?
It depends. I'm trying to answer this question without giving away um, what we internally believe and what we internally plan for. Um, we do believe that in 20 years or 20 years from now that both sides of the business will continue to produce significant revenue and significant gross profits for the business. And just let me just leave it there.
Okay, we understand. Now from Instagram, we have another question. How does one find the requirements for a service station from FESCO?
Not really understand the question, but if you're asking how do you develop a service station, FESCO branded service station,
I think
um,
that's what they're asking.
right? If that's what you're asking, it usually service station is all about location. So it always starts with the location. If you have a location in mind or a property that you own, you can just reach out to us and we'll help you through that journey. But it all starts with a location.
All right, so can you just remind our viewing audience where to find you, how to reach out to you?
Absolutely. You can always reach us at investors at fescoja.com, or you can dial our head office, but easiest is to email us at, and you can go to the investor section at on our website, and our email address is investors at fescoja.com. You can email us and you'll be able to, we can carry along that journey if you want, if you so want to open a service station. Again, we've done this many times with people just like you, so it's something we're familiar with, and we're actually going down that process with people now, and we've done so in the past. It's part of what we've been doing since FESCO started. Again, most of our service stations are dealer owned, dealer operated, so it's exactly what our model is.
All right, thank you very much. Jerome is asking, what are the net profit margins the company attains in a company owned, company operated versus a dealer owned, dealer operated?
That's not something we'd share. That's not something we'd
I
share.
think Jerome is digging very deep here.
Yeah.
So let us move along. Jerome again is asking, are there any plans to get into solar or battery storage?
Let me just talk for this one. Let me just talk within the next 12 months. No, not within the next 12 months.
All right. I think we can move to this question from Sean. With the coming company growth, it's only fair to assume that expenses will grow as well. How can you assure shareholders that the bottom line will also see some growth along with the top line?
Excellent question. Um, so our top line has been growing, and when we talk about top line, we don't really talk about revenue. We talk about gross profit. So gross profits have increased 76%, but profitability hasn't increased 76%. If we're talking on a net profit basis. Again, this is a decision we took to, for one, to increase our advertising spend significantly. Um, I think we've spent so far this year, um, I think in excess of 42 million, I think compared to, can't remember if it's about 8 or 9 million last year. So we've decided to go along a path of, creating brand awareness, especially because we're new to the, cooking gas space. Again, we're starting a new business, or we started a new business in LPG at around April. That doesn't mean that the revenue start when you start the business, but the expenses, the interest, depreciation, all that starts. So on a annualized basis, when you start talking about gross profits, LPG will contribute much more significantly to the gross profits in the upcoming financial year and for Q4. And what we can say is that we have enough projects, and again, we always focus on a certain ROI project or projects that allow us to not just expand gross profit and but also expand net profit. So yes, the goal is always, and the goal, and you will see it in the upcoming quarters and the upcoming financial year. yes, there is the we anticipate an expansion of net profit along with gross profit.
That is very helpful and clear. Sean again is asking, or he is stating first that you mentioned not paying dividends this year or next year because of growth reasons, which is fine. But what can shareholders look out for in order to know that the dividend drought period is soon over?
Right. So we don't, at this point in time, we want to pay a dividend. We strongly want to pay a dividend, to be honest with you. We believe in, generating not just capital gains, but also giving back a dividend to our shareholders. So what I can say, if the macroeconomic situation changes with regard to interest rates, or if the junior market so allows us to increase our cap, we're able to raise or to do a APO, we can start to consider those areas for, to accessing additional capital. The challenge with a growing business is to balance growing the business and then redistributing, profits back to the shareholders. We want to pay dividends. We want to get back to paying dividends in the quickest possible time. But at this point in time, it's just much more beneficial for shareholders to, delay a smaller dividend now for a bigger dividend, which will come from the growth in profits and growth in the business.
All right. And the final question from our audience at this time is from Orville Reeves, and he's stating that sizable is relative when it comes to dividends. And he's asking, what is sizable to you when you say a sizable dividend in the future?
All right. So our dividend policy speaks to paying a minimum of 25% of the the net profits of the company. So if you looked at when we made about $100 million per year, that would be an aggregate dividend of 25 million. Or when we made approximately 260 million 2 years ago, that dividend would be approximately 60 million for the year. And I think we paid 65 million in dividends that year. Last year, we made just 570 million, which would equate to approximately about 140, almost 150 million in dividend. So as you grow the profit and the bottom line of the company, what would pay in dividend grows also. So if you look at this, I don't want to tell you about this year or in next year, or maybe that's what you're trying to ask me. But if we look at the historical numbers, if we were to pay a dividend last year, it would have been 150 million versus 65 million the previous year. And if our profits continue to grow and the dividend policy is to pay 25% of that, you can see how it has been increasing by a magnitude of how our net profit has been increasing. So what do I call sizable? Well, historically, it has moved significantly. Again, we're moving from $100 million profitability company on an annualized basis to 150 million thereabouts on a quarterly basis, with yet room further to grow.
So thank you for that, Jeremy. One more question has come in. Are there any plans to diversify into renewables anytime soon? And if so, what aspect of it, if you're able to share?
And you're talking from a revenue and a sales side of the business, or are you talking from our cost side of the business? Some of our service stations already utilize solar technology to reduce some of our costs. If you're talking on the revenue side of the business, not for this financial year.
Okay, thank you for that. I think he would have been referring to the revenue side, but it is good to know that you are already utilizing renewable energy within the company. So I had one last question for you. In the quarterly report, you would have mentioned the contractionary forces and some consolidation within within
Yeah.
the industry, and that being a risk factor, or yes, a risk factor
Mm.
for FESCO. How much of an impact is that having on the company, and how do you mitigate against it?
Well, there were quite up. Well, the biggest, I guess, consolidation in the industry, I guess, was Massey Group buying IGL's business. There are also contractor, forces within the gasoline trade regarding, suppliers of fuel. How has that impacted us? It has, made us, what do you call it, sharpen your knives and just prepare better and prepare more. Um, as a team, we try to control, or we try to work with the factors or the variables we can control. No contractionary, pressures of margins and or consolidation, we have no control over that. So what we try to do is whatever we have control over, we try to do that better. So we plan more. We try to, introduce technology more. We try to be more creative. So it impacts us, but we look at everything as an opportunity, and we try to maximize each and every opportunity that we have, and we don't really, to be honest, we don't really focus too much on stuff we can't control because it's just not within our control.
Thank you so much for that. I do appreciate you sharing. So, as we come to a close, I want to thank you once again, Jeremy, for coming on the platform and sharing the report of FESCO for Q3 2023. I want to thank our audience for tuning in and for participating through their questions. At this point, I'd like to hand over to you, Jeremy, for your closing statements for this earnings call.
All right, again, I just want to thank you again, Team Learn, Grow, Invest, for giving us this opportunity and this platform. I want to thank again all our stakeholders, from our customers. Oh my, thank you, customers. You really showed up and showed out for the brand. You've made FESCO and FESGAS a great brand. We're really, really proud of our team, proud of our directors, our management, our line staff, our pump attendants, janitors, supervisors, managers, middle managers. We're just really proud of the team. We're growing from 7 employees to over 130 now, with growth, expected to be over 200 plus by the time we end not this financial year, but the next. We're really, really, and that just shows you the growth, to be honest. And you can't, as I said, we can't finance that growth with debt. Luckily and thankfully, for you, and thankfully to you, and the public, that we've been able to do it through profits. So you don't have to go out there asking, for additional capital at this point in time, or borrowing. We were able to generate resources through profits to be able to expand that business, and that business is expanding greatly. So again, we just want to thank everybody. We want to be an innovative brand. We've come out with a lot of innovation in the short time that we've existed. We're always trying to give Jamaican people better. We do believe, and we are a proudly Jamaican company, and we want to develop areas, develop communities. We just want to do stuff that Jamaicans can feel proud of, and so with all the projects that we do, we try to do it excellently. We try to give you value, and we try to give you destinations that you can feel proud of, that you take your family to, and you can come there in the night and feel safe. 4, 5 o'clock in the morning, you feel safe coming to our locations. So what I really want to say is, I just want to thank all our stakeholders for continuing to support our company, and we'll do our best to live up to what we have done so far, and continue to do so in the future. We really hope that you continue to support our service stations and our FESGAS cooking gas. And we hope to do you proud with FESCO Oval, and hope to see you all there next year in July when we open. But we really think we'll be coming with something really special, and something that the whole Waterhouse, Spanish Town Road, the whole Jamaica as a nation can be proud of.